Going live. Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 8th of August and we have Charu Chanana, our regular guest on Tuesday. She's the market strategist from Saxo Markets. Charu, as always, great to have you on the show.
It's a pleasure to be back with you, Brian.
Now, Charu, before we get your insights, let's take a look and see how markets across the region are performing. We're going to start close to home to you. The Straits Times Index is down 0.02%. Looking across to the rest of the region, we've got Bursa Malaysia, where I'm at, it's up 0.33%. Shanghai is down 0.09%. The ASX All Ordinaries is up 0.11%. The Nikkei is up 0.28%. The Hang Seng is down 1.43%. Rounding up the numbers, we've got the Kospi, which is down 0.08%. It's a pretty mixed market. Charu, tell us why.
So, Brian, I think, in this week, particularly, the markets are just waiting to get some direction from that US inflation report, which is due on Thursday. Last week's jobs data out of the US did not really lead us out of that Goldilocks that we've been trading it, right? Inflation slowing down, economy still holding up well. This Goldilocks has continued for a very long time. And I think right now investors are just on the sidelines to really get a better insight into where we go from here. Do we get a no landing where growth really picks up from here, or do we get to a scenario where there is stagflation or recession concerns picking up? And the US CPI data this week will be particularly important, I think, to get us in one direction or the other.
Now, Chara, I'm going to come back to you about that in a second, but the numbers out of China that's just come out don't give us a very good, it came in at below expectations. So China saw a 14.5 year-on-year drop in exports. Imports came in 12.4% lower year-on-year. Now, this is significantly less than Reuters poll of economists, which predicted a 12.5% slide in exports and only a 5% slide in imports. Now, this leads to the question which you just talked about. Is really a soft landing a reality, or it's just a mirage?
Yeah, I mean, if you look at China data, certainly that has failed to pick up so far, despite those targeted easing measures that continue to flow in from Chinese authorities. Agree, they've been a little bit more measured than expected, but there's been several rounds of support measures. Now, really, I think this week is extremely critical for China data as well. We've already seen that disappointment mostly on the import side of the trade data today, but also exports, not looking good as well. So that again raises some questions of further stimulus measures. But I think there's even more important data due today in terms, not today, sorry, in this week for China, which comes from the credit financing point of view, whether we see new loans, property loans picking up or not. Is there the health of the property sector getting revived or not? I think these are some key questions. And then, of course, inflation, or rather in China's case, we can call it deflation. How deep in the deflationary territory are we going there? I think some very important parameters to watch to understand how much the Chinese stimulus can ramp up. But overall, I mean, when you talk about the global economy or the US economy in particular, certainly soft landing is a theme that has been front and center. Markets have been celebrating the disinflation and the Fed pause as well. But we really need to understand that the rate hike cycle that we've seen has to filter through the economy in some way. And Fitch raised it last week about the concerns about the medium-term fiscal trajectory for the US. And if we do see a cascading effect there, there's a huge amount of debt coming due for the US corporate sector in the next 2 to 3 years. And that will potentially have to be refinanced at a higher rate, which means that there will be some tightening of financial conditions there. And if we do see downgrades, if we do see bankruptcies, you will see the impact on that flowing through to the labor market as well, which has been resilient so far. So, yeah, I mean, in my sense, I think the credit risks are becoming more and more pronounced from here. And it is extremely likely that the tightening cycle that we've seen leads us into, if not a huge, but a modest recession at the end of Q4 or early 2024.
So interesting now, your position at Saxo is really around a recession Q4 or early Q1, mild or heavy, we don't know yet.
Absolutely. Yeah. I mean, we've been talking about soft landing for quite some time. We raised a little bit of an issue of a credit crunch when the banking sector happened in March, but actually we've defied all recession calls so far. But, looking at the debt trajectory, the fiscal trajectory, where it's going, it does look like that financial conditions can tighten materially from here. And we would see an impact of that on the consumer side, on the business investment side as well.
Charu, final question is around oil markets. Now, we've seen really oil prices heading up for about 6 weeks in a row.
Yeah.
What's the reason for that? And is this sustainable?
So, the oil market has now been focusing on the supply side of the story because, like we discussed, with that soft landing narrative playing out in the markets, the demand side has not been so concerning. So, the focus has shifted on the supply side, where there are concerns about a tightening market in the second half of this year. We've seen Saudi Arabia extend its production cuts. Exports out of Russia are, continuing to reduce as well. So I think those conditions kind of create a situation where we will see supply being the bigger driver of the oil markets in the second half of the year, unless demand conditions deteriorate faster than expected. And that does mean that, there's potential for these oil prices to continue to rise, which brings me to the point that we're talking about recession. But if inflation starts to become a problem again because of these rising oil prices, I think the worst case scenario is still that we could actually get to a stagflation scenario as well, where inflation still being a problem, economic growth deteriorating faster than expected. And that is, I think, a situation where the Fed and the ECB and major central banks might have to turn gears despite inflation settling at higher than target levels as well.
And Charu, I want to just throw another bit of fuel to the fire. It's a conversation that we've had on this show before, both of us. Really, it's around the impact of food prices, which have continued to accelerate, and that will fuel inflation, particularly in emerging markets.
Absolutely. I mean, food prices, looking at what climate is, doing, El Nino concerns, looking at geopolitics. I mean, Russia and Ukraine tensions are continuing to escalate. And then India stopped exporting some parts of, the rice as well. So there are continued tensions on the agricultural side as well. And food prices will hit emerging markets higher than any of the other economies as well.
And so we are really staring down the barrel of stagflation. Charu, thank you very much for your insights. Thanks for coming on the show.
It was a pleasure again to speak with you, Brian. Thank you for having me.
Now, I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.